Gold respected so far the 1983 levels which we discussed in the Asia and Europe session update today morning, few hours back, that is the only level below which we can expect slight bearishness in gold. Precisely, it has so far respected 1983 and has recovered a bit. At the same time, oil has seen a little recovery, gone towards 82, and that is also a greater resistance between 81 and 82. Precisely, it is staying between the same. So now what to expect with the US session from gold and crude oil, we will see with the help of charts and indicators. If you are new to the channel, do subscribe to the channel in order to get the live updates. This is the second update for the day. Every day I release twice updates, and the first update is always with the Asia and Europe session. Thus, press the bell icon or join my free Telegram channel to get live updates. Let's have a look at the hourly charts. Here on the hourly chart, first of all, look at this drop and then the retracement. It has stayed in this bullish channel. It has yielded lower highs compared to the double top levels. Now, what has happened here? The lows, but here the lows are also at a slightly higher levels, and then the retracement. Now, drop, remember drop, retracement, and again starting to continue with the drop. Also, if you look at the hourly charts, 1980 is certainly a greater support. We have seen multiple candles getting reversed from the same zone. Stochastic near to overbought. MACD is still trading bearish. It is not yet crossed over, and it was just trading with the fat belly. It has converged a bit. Now we may see divergence if it is bearish. RSI trying to trade with slight bearish bias as well. Coming to 2 hour. Now on the 2 hour chart, there is a bullish cross between the 20-50 period moving average getting the resistance around the same zone. Prices are reversing, but my focus area is this zone 1983, where we have maximum support for gold here, only below which further bearishness to prevail here. Now see, on the webinar we started yesterday, I had discussed in my weekly review yesterday that there is a possibility of prices to stay bearish, stay on a sell side for gold, or we may see consolidation with lower highs and higher lows. Precisely right now, it is very much in the consolidation mode as of now. If you look at a stochastic, this has seen a little rise after hitting the bottom, while MACD is still trading with divergence and bearishness. Now, if you look at MACD, see first wave, this is retracement. As you can see, the slope is gradual compared to the drop. Now this is the second wave which is initiating. RSI looking downwards, trying to stay bearish. Coming to 3. Now on the 3 hour charts, look at 4 candles getting resistance around 1988, which makes it a greater resistance. 1988, 1991. Last week also I have mentioned several times, this is first resistance zone, and beyond that 1995. 2 resistances here. Precisely 1988, 1991 zone is still giving it a greater resistance on the upside. Now what has happened? Red candles, reversal, and now it is resuming its downtrend. Possibly this candle where it closes, and when the next candle starts, I will definitely look into it. If it breaks below 1983 is where the bears will take over. Stochastic rising from the oversold. MACD is still divergent and bearish, looking downwards. RSI is also trying to trade with slight bearish bias. Coming to 4 hour chart. Now on the 4 hour charts also, see if you look at higher lows here, possibly at this zone at around 84, 83 is where I will try to see how prices behave, because see, providing higher lows also prices may reverse, but the bearishness is confirmed once it is even passing by the half of this previous candle. Even if it stays below the half of this previous candle, we recommend that is an indication of the bearishness. Still, I will recommend you to sell only at 1983, below which 1980, 78 is the strongest support, and breaking below 78, you can say that the bears are taking over. Now this is very clear here, drop, retracement, and it is starting to take the shape here on the bearish note. So the lows here are at around 78 for this candle. The stochastic rising from the oversold. MACD is almost flat and at zero levels, and RSI trying to trade with slight bearish bias. Coming to the, now see on the daily charts, the top is here at around 1980, 1993, 1995 zone, and since then we have seen slight bearishness. Yes, the bearishness is still not much prevalent. As you can see, the body size is hardly anything, and hence if it has to trade bearish, it has to break below 78, 80 zone for further bearishness, which might take the prices towards 1970, the first support levels. Stochastic flat, but look at MACD on the daily charts. It has crossed over, trading with divergence, trading bearish, and I have mentioned in my previous analysis as well, look at this crossover at these levels, yielded very strong bearishness. At the same levels, yielded very strong bearishness. Now it is back to the same zone after months. This is early 2023, and this is now. So possibly this could lead to slight bearishness. RSI coming out of the overbought zone. Thus, looking at this, I will recommend you to sell gold today at 1983, where first support levels at 78.80. Below 78 is where the bearishness is going to get stronger, and we might look forward to 1970 levels as the first targets. On the upside, we have to be watchful, careful at around 1993. Beyond 1993 is where the bulls might take over. Remember, the bias is bearish, but don't trade as per the bias. Even if you see it staying above 1993 levels, you have to eliminate with your sells here. You have to limit or restrict your losses, because see, markets, these are markets, and it can take any which direction, it can take any turn here. You have to just stick to the stop losses, you have to just stick to the levels here. Thus, selling at 83, certainly 1978.80 should be the first support zone. You have to be careful there. And on the upside, 1993, beyond that, certainly bullishness will take over, and I will look forward to 98 2002. 98 2002 is the strongest resistance zone on the upside, and a move beyond 2002 nullifies all the bearishness, and it is going to rally. So take your trades accordingly. Now, if you want to learn this art of trading, you should join my mentorship. The 27th batch is going to start on 20th of November. Limited seats are available. Register yourself now itself. Reach out to me for more details. My Telegram and email IDs are mentioned in the channel and video description. And yes, you will get more details directly by visiting our platform, forexfunda.com. This is the platform, forexfunda.com. This is created with the vision to provide everything required by a trader under one single umbrella, whether be it the top market news from across the globe, or be it the economic calendar, or the markets, or the charts from across the globe. Anything which is traded across the globe is available here in the markets tab. You can search for your favorite instrument, find the live prices, and do your analysis. You can consult with me. You can also join the groups here where you can discuss with your like-minded traders. Now, here in the home page, you will find the details with respect to the next batch, all the training curriculum, the timings, the support services, everything is mentioned, and here is the fee. You can book your seats by paying at the platform itself. And the webinar which we talked about, this is a weekly series which we have started 1 hour every week, every Sunday, just before the markets open on Monday. And this is the next webinar which is going to be conducted on next coming Sunday. You can book your seats now itself by visiting the tab here. Also, if you're looking for signals or mentorship, do reach out to me via Telegram, email, or the platform forexfunda.com. Now let's have a look at crude oil. Now see, crude oil today breached the resistance at 81. I had mentioned you and I had asked you to buy at $81 levels. We can look forward to 82. 82 is close to $82 levels is achieved, and it has retraced since then. Now if you look at the movement, the rise, the retracement, it is trying to create a retracement zone or a bullish channel. After this sharp drop, it is under this retracement or a bullish channel here. Only and only if the price stays above 83, 83.3, you can consider this as a reversal, else it is just a retracement. So yes, it has achieved the highs at 82. Now we may see prices staying between the zone here. 81, 80.6 is the greatest support here for oil for the day. Stochastic looking down, MACD is green. It has crossed over at bottom. This was why we have seen slight bullishness, as it was trading with too much of divergence. RSI is flat, coming to 2 hour chart. Likewise on the 2 hour charts, but you look at the formation here, the drop, retracement, drop, retracement, drop, retracement, drop, retracement. So yes, largely it is still trading bearish. The top here at 83, 83.3. Beyond this only, we should treat this for a reversal. If you look at the 2 hour charts here, yes, the base is created here at 80.6, 80.7 zone, and the resistance or support levels now at 81. So only bearishness is if you see prices staying below 80 points, rather I will say 80.5 levels, only below which you can treat this as bearish, below which I will look forward to 80, 79.6, which is a greater support. I have mentioned and I have shared in my weekly review and my webinar as well that why 78 and $80 levels are a greater support for crude oil, and we can possibly see a bounce back from those levels. But right now it is still under retrace, not a reversal. Stochastic looking downwards, MACD has crossed over for a buying entry. It is staying green. If you look at the formation, rise, retracement, and now again looking forward to trade with bullish bias. I will wait for it to break beyond 82 for further confirmation of a rise. RSI is staying flat, coming to 3 hour. On the 3 hour charts, if you look at moving averages are still divergent, is still bearish after the drop, the retracement, and it may continue, but $80 levels certainly is a greater support, 80, 79.6 zone. Now on the 3 hour charts, if you look at, see, after forming the base first bullish candle, lower highs here, a pullback, and this is trying to reverse. Now where should we consider this as bullish? Yes, beyond 82 levels, certainly more bullishness. Right now what is happening, it is trying to give another bullish candle from here which can take the prices further highs. So 82, 82.6 is a greater support zone, 82.4, 82.6 is a greater support zone here, resistance zone here, and beyond this more bullishness to prevail. But I do see this still as a retracement, and if it falls below 80.6, just stay short. Stochastic rising, MACD crossing over here for a buying entry, RSI staying flat. Coming to 4-hour chart. Now, if you look at 4-hour chart, see flat bottom, higher lows, higher highs. Look at the wick here. The wick is more bigger than the complete body. This suggests that the prices are not willing to stay bullish. I will recommend you to sell here at 81, but then only below 80.6 is where, or 80.5 is where the bears will be taking over. In between this zone, that is 81 and 80.5, we have to be cautious with the oil trade here. Yes, if you are selling at 81, we have to be extremely watchful and alert as long as 80.5 levels are respected, and below which you can say that the prices are turning bearish and a crash can be expected. Stochastic rising, MACD crossing over for a buy, RSI flat. Coming to the daily. Now look at the daily charts. Previous 4 candles having longer tails on the downside. It has started the day on a flat note, and that is why I say there is greater support at 81, 80.5. Yes, if you see the prices staying below 80.5, stay short for 80 and stay short for 79.6, in fact 79. Yes, first red candle, second red candle can be seen, which might take the prices towards 79. Possibility is there, but we have to be watchful how it behaves at 81, 80.5 levels. You can sell here at 81, but with the caution note that prices may reverse. You have to trade with caution there. On the downside, below 80 is certainly more bearishness, and 79.6, 79 is the next target. Thus, stick to the levels and take your trades accordingly. Trade with a stop loss and a trailing stop loss. Like, share, subscribe, and comment. Join my mentorship batch. Join my signals channel. Join my webinar every Sunday. Reach out to me for any of your trading or training queries, and join my free Telegram channel for live market updates. All the links are there in the channel and video description. Thank you very much. Have a great profitable trading day. See you again tomorrow with more updates on crude oil with the Asia and Europe session. Thank you.